Mhm. So, hey, TikTok, we're just getting started. Thank you guys for all showing.
Oh, it came straight.
Isn't there? Hi, are you here for the workshop? Come on in. I am Linda. Yeah.
But take yeah. What would you say? Oh, restroom is right through the hall. Just it'll be on your right side at the very end. At Jackson, we got Peter Jones. See if it works this time.
All right, is this a Mustang or a mortgage 101? Thank. I don't know if it was actually from you, but
Linda,
okay.
to pick the right pizza in the right spot.
Thank you, Linda.
Welcome. This is the Instagram as well.
Vending industry. You're really?
Yeah.
Oh, awesome. Oh, right. Okay.
Oh, he's like, I'm gonna see if you tell the right stuff.
That's why.
Thank
We actually have a listing coming out. You looked at it? So, coming live, I believe, let's say, 20.
Be a connection between all the brokers, so.
Also the big one, the big purchase prices.
I know you're here with Precious.
Princess.
Okay, hopefully I got it out of the system before I.
My computer's working slowly.
He does that.
It gets rid of everything you need.
Like, oh, let me take 5 minutes.
You have the veggie one?
Yeah, we have one that's veggie and one that's, okay, here we go. All right, everyone, we're going to get started. We're starting a little bit late, and hopefully I will be able to get Instagram up and running. So if you are waiting for Instagram and you're on my Facebook or YouTube and you're like, where's Instagram? It is coming. We're going to get started. For those of you that don't know who I am Linda Hillman, a realtor at KW in Stockton, California. I actually go from the Monterey County all the way up to Placer County. So if you are looking in that area and you need a real estate agent, I am your girl. I'm going to be introducing some of my co-hosts. We have Princess Scott, who is also a realtor. She'll be coming and talking to you about a portion of the process of purchasing. We also have um, Jacob Stewart, who is with Coast Home Loans. He will be talking about the mortgage piece. And if you have any questions, if you're watching live, go ahead and type in your questions, and we will definitely try to make sure that we get to your questions. If you're here in person, you can all just raise your hand and we will make sure that we answer your questions. And for those of you that I sent and told you I was having trouble getting on Zoom and you have to watch live, again, for you, just send your questions and we will make sure that we get to them. If for some reason we miss your questions during the presentation, after the presentation, whether it's for myself, for Jacob, for Princess, or for our title reps that'll be here, and I'll introduce them in just a moment, we will make sure that you get that information. So we also have Sal Sandoval, who is with us, and he's brought some guests. So I'm going to allow them to introduce themselves when they come up so you'll know who they are and who to reach out to. But you guys, I'm just telling you, you're getting a treat today because we got all bases covered in this workshop. So I want to thank each and every one of you guys that are here. Also, those that are on and those that are watching us live. If we are not looking at the camera, it's not that we are not paying attention to you, but we do have people here live. And so we want to make eye contact with everyone. So like I said, we will be watching the comments and we will be doing our best to make sure that we take care of each and every one of you. Again, welcome, welcome, welcome. We are going to get started. I am going to share my screen on our live stream. I don't know what's going on with my thing, but thank God it's touch screen. Let's see. So as my presentation gets up, we will get started. And for those of you that are here, I guess because I'm on my camera, it won't let me do there, but the slides are what you guys have in front of you. So. Okay, while that's setting up, I'm just gonna get started. I'm going to get it. And if I talk fast, because I get excited, for those of you that don't know, I'm I'm an author, I'm a pastor, I'm a real estate agent. So if the spirit hits me, I might get a little bit churchy and start talking real fast. Y'all just say, slow down, spirit, okay? And then I'll come back. I promise I will come back. But if I start talking too fast, because I get excited, please just kind of say, can you repeat yourself? And I will do that. We're talking today from dreaming of owning a home to actually owning a home. And how many people think that you can own a home? Okay. How many people think because of the market, you can't? The affordability is not there. Good. I'm in a good, we in a good place here. So let's talk a little bit about KW. Our belief system is that we believe in the win-win or no deal. So if we're representing the buyer or the seller, we want it to be a win-win situation. We believe in integrity of doing the right thing. And that means sometimes walking away, right? So we believe in integrity. We also believe that the customer comes first, always. We believe in commitment in all things, communication, not just communication in the fact that we want to tell you what's going on, but we want to understand, why are you trying to buy a home? Why are you trying to invest? Why are you trying to sell? We want to seek to understand so we can communicate well. Creativity, ideas before results, right? We want to make sure that you know all of your options before we just jump in and give you something that may not be the best option for you. We have teamwork, which is why you see me here with other real estate agents, with the mortgage company, with the title company. Sometimes I have home inspectors and things of that nature, because we come as a team. We believe that working together, we achieve more. We believe trust. So we always start with honesty, equity, opportunity for all. So that's why I asked, who believes that you can't afford a home right now? And then success. So we want to make sure that we are giving you every opportunity to succeed. Our next one. Okay. This is going to work because it's showing, but it's not allowing to move it. All right. So I'm sorry, the slides are not working. Our technology is just not giving us any grace today, but that's okay. We keep moving forward. If you want the information, we do have things that we can email to you. So just type your email in the chat, or you can send it to me. I'll put up my contact information. You can send it to me and I can make sure that you get all of the paperwork that we are, or all of the things that we are handing out here to those live. Now we're going to be giving away some things. Those of you that are watching us live, sorry. That's why you got to come. You got to come because we give away stuff. We'll be giving away. So those that are in the room will have an opportunity to get that. And maybe the next time it'll be you. Who knows? Okay, so let's talk about fear versus fact. Someone tell me what fears you may have in purchasing a home or selling a home or investing. Not having enough finances, okay? Any other fears?
Stress.
It's really stressful. You're not supposed to say that to the agent. The stress of it, right? It can be very stressful. How many people know that when you are making a decision to purchase a home, you're making one of the biggest decisions you'll ever make in your life, right? Outside of getting married and having children and sending the kids to whatever college, this is a big decision. So yeah, there is a lot of stress. Any other fears?
If you sell, will you be able to actually purchase another?
Okay. And when you get ready to sell, will there be opportunity? Because I mean, inventory is low. There's a lot that goes into that statement. So let's talk a little bit about the fears that most people come up with, which are kind of some of the ones you stated here. So fear number one says, I can't afford to buy a home right now. And the fact of the matter is, until you do the math, Mr. Jacob, until you do the math, you don't know if you can or can't afford a home. The other fear is I should wait until the market gets better. How many people have thought that or said that or heard that? Right? So fact is, there is never a bad time to purchase a home. If you can afford to buy the home right now is your best time to buy it. So you may hear a real estate agent say this. I know I've said it: date the rate, marry the home, right? Which means the rate might change. You might be able to refinance in a few years, but that home will be gone. So sometimes you have to think about it. If you can afford to do it now, go ahead and do it. The next fear is I don't have the money for the down payment. I'm going to let Jacob do that. But the fact is, there are a variety of down payment options available to you. The other one is I can't afford to buy my dream home. My dream home has a tennis court and jacuzzi and basketball court and 5-car garage. I'm living in Beverly Hills on a Compton salary, but yeah. But that's that, I didn't want to make it, I didn't want to cause my city to look bad, so I'll make Beverly Hills look bad. But that's what people think because I can't get into the home that I want. We have answers for you. The fact of the matter is, the best way to get closer to buying your dream home is to buy your first home. Another fear is I can't afford to buy a home because my credit isn't very good. There are always options. The next one, I should wait until I'm certain about my domestic future. I love that one. I'm not sure. I might get married. I might not. I might have kids. I don't know. Right. So you don't have to wait until you're married, partnered, or ready to have kids to buy a home. You can buy the home now. And then if you need to upgrade or get a bigger one, you can do so. Last two, buying a home seems way too complicated. It can be stressful, right? No one would ever tell you that buying a home is easy, but it is something that can happen. Okay. It's TikTok, so TikTok is going to, if they say something crazy, it'll be like, yeah, not showing her that one. Okay. The last fear, I should pay off my student loan debt before buying a home. Student loan debt doesn't prevent you from buying a home. And like I said, those Jacob will handle, and he will talk about them. The next thing that I think you're doing this one, right? No, okay. So let's talk a little bit about why buy now. Mortgage rates are where they are. They lowered and then they got high, and we don't know where they're going to land. I know that some people think that they may go down to the low sixes. Others say that they may just stay where they are for a while. Jacob can do that. But like I said, date the rate, marry the home. Okay. Long-term investment grows, equity builds up. Average equity goes up 4% every year. So when you get your home, the equity starts to increase. And if you want to do the math on that, Jacob or myself, we have a app that we can show you that information. So you'll know if I purchase a home at this, what would it look like a year from now, 2 years from now? Value and appreciation. And then you're able to pay down some debt, right? Because if you have equity, you can borrow against that equity and pay down debt and kind of put yourself in a better financial situation. How many people have ever heard of generational wealth? Okay, that's my heart, is to show people how to have generational wealth using real estate as your catapult. So that's why I talk about debt pay down and stuff like that. I also help people, help them with their credit and things of that nature, because that's something I do on the side. Because I want people to know that once you make this decision, you have options. Okay. The other thing is the pride of home ownership, stability and security. I know when I was renting, I would want to paint the walls because you go in and they're nasty white walls and it just didn't feel good. And so there's things that I wanted to do. And because I was renting, I could not do that. When you have a home, you can make that home yours and you don't have to ask permission from anyone else. And there's, every once in a while, landlords decide they want to sell their home and you're living there paying rent, and they say, well, we want to sell, and can you move out in 90 days? Because we're in escrow right now. So you definitely want that security for you and your family. Sense of community, freedom to customize. I talked about that. Tax benefits. How many people rent in here? Who rents? Okay. At the end of the year, can you go to your landlord and say, hey, landlord, I paid you $35,000 in rent. Can I get 10% back?
Nope.
Okay. You have that option, sort of, kind of.
You might get a few dollars back on that.
Yeah, but
But
even with
no.
even with the Schedule C, right? You still don't get it 100%,
No.
right? So you still, I mean, I do taxes, I know. But even with the homeowners, you don't get 100%, but you can get your mortgage interest, you can get your PMI, you can do the property taxes. So there's things that you can get back that as a renter you're paying into, but you're not getting anything back for that. So, and then I talked about wealth building. We're going to skip ahead, and there's a page that looks like this for those of you that are watching. Get your package. What I want to do is take 5 minutes, or maybe not 5, 2.5 minutes. I want you guys to, that's it, the page with the, yeah. I want you to either write or draw. If you're like me, you're going to write it out because I can't draw to save my life. What your dream home looks like. Just kind of, what is it that you want in the house? We're not talking about what you necessarily need in the house, but what would your house, if you had all the money in the world to purchase a home, what would that home look like?
It's a basketball court. Tennis court. Yeah.
And again, for those of you that are watching live that are not here in person, if you type in your email address, if you don't want to type it in the comments, just direct message me or send me an email. My email is Linda, Linda, at racheladamsleegroup.com. Rachel, Rachel, Adams, Adams, Lee, Lee, group, group.com. So Linda at racheladamsleegroup.com. And I will make sure that you get all the handouts that we are handing out today. And again, if you have any questions, you can send them there also if we miss them during the live. So what we're doing for those of you that might be popping in and just watching us, we are writing down or drawing our dream home. Give you a few more minutes or seconds. Finish it up. And those of you that are on StreamYard, I am going to try to see if I can get this slide thing to work.
It is working.
Oh, look at that. Look at that. I knew there was a guy. Okay. I'm sorry, I just get tickled by it. I get so, but it's, let's see. Let's see. Oh, it won't let me move forward though. Okay, so we're going to get started as I'm trying to see if I can get this going. Sure. Okay, all right. Next time. Sorry, I was trying to work it out for y'all, but it's not letting me do it. But now we can see we do have slides. Okay. So let's get to the meat of it because we still have Jacob and our escrow people to get to. And basically what I'm going to do you guys want to do at the beginning or closing? Oh, okay, all right. So, sorry, just had to get the order of it because sometimes I do it a little bit different. So first of all, let's talk about the buying process because a lot of people are fearful to start because they're not really sure what it is that they are to expect. So here it is. Here you are, you're sitting at home. Maybe you're on the internet surfing Zillow or Redfin or some other website, or maybe you drive by and you see a for sale sign and you make the decision that you want to try to purchase a home. Okay. That's step number one. You decide, I want to see if I can purchase a home. The next thing you're going to do is you're either going to contact a real estate agent like myself or Princess. Um, inside joke there. Like Princess, or you're going to contact a mortgage person. And that mortgage person will then refer you to a real estate person. Whichever way you go, there's not a wrong way to do it. But what's going to happen is if you contact the real estate agent, a good real estate agent is going to say you need to get pre-approved, right? And what that means is that they're going to then refer you to their partner that's on their team that is a lender. And that lender is going to require or ask you for some documents. And when they ask you for those documents, the quicker you can get them to the person, they can get us a pre-approval. Once you get pre-approved and we know what the dollar amount is of that home that you can afford, we're going to begin the home search, right? Some people want to, well, let me search and find a home and then I'll go through the process with the lender. The reason why you don't want to do that, what if you find the best home? What if you find that home that you gotta have, but you haven't been pre-approved? We cannot put in an offer for that home until we know that you're qualified to get the loan if you're doing it. If you're paying cash, forget everything I just said. But if you're doing a mortgage, we need to know that we are within budget, right? That we can get that for you. And so we try not to get your hopes up high without knowing that we can back it up. Okay. So once you find a home, and I'm going pretty fast, so if you have any questions, please feel free to send those questions over. Once you find a home, then we submit an offer. And basically what we'll do is we'll sit down with you and we'll say, okay, this is how much it is. What do you want to offer? Here's your budget, blah, blah, blah. And we want to make sure that that offer is the best offer that's competitive. And hopefully your real estate agent has contacted the listing agent and said, hey, look, we're thinking about giving an offer, and they know what that seller is looking for that'll make your offer tantalizing. Get them to consider it, okay? So we submit the offer, and the offer gets accepted or it gets countered, right? What that means is they say, you submitted a good offer, we're going to go ahead and accept it. They don't ask for anything. If they counter the offer, that means, it doesn't mean a no. I want everyone to hear me. It doesn't mean no. It means that they want something a little bit more favorable, right? You have the opportunity to counter back or to accept their counter. And we'll get, your agent should go deeper into that. But for the sake of this, I want you to know that those are the two outcomes. They'll either accept it or they will counter your offer. If the offer is accepted, it's exciting. That's when the fireworks starts to happen, right? So basically you have 3 business days, and escrow will talk more about this, or title will talk more about it. So I'm just going to kind of skip over all of this. You will have 3 days to submit your earnest money deposit. Now we call it an initial deposit. You will have 3 business days to submit that. Normally that is 1 to 3% of the purchase price. So just think about that. If you're purchasing a home for $500,000, then it'll be 1 to 3% of that. Normally, we like you to come in at 3% because it means you have a little bit more skin in the game, and it looks a little bit more competitive to the seller. However, you can do 1 to 3%. Any questions on that? Okay. Once you turn in your earnest money deposit or your initial deposit, the real estate agent will contact the home inspector, will contact the pest inspector, the roof inspector, all the inspections that you have or that you need to make sure that you do your due diligence on the property. Normally what I do is once the offer is accepted, I start calling around because we only have a certain amount of days to get that taken care of. And I believe Princess is going to go over that. So I won't go into detail on that, but just know we have a certain amount of days to get that done. And so I will contact, once I know the offer is accepted, I will start that process and make sure that we can get it done within that time. There's also the lender that will contact the appraiser to get the home appraised. And Jacob will speak more on that. Let's go down to, actually, we'll turn it over to Jacob at this time. And Jacob will talk about the loan process. He'll talk about the appraisal and underwriting and getting your loan approved and all of that good stuff. And then we will be in the hands of title and escrow.
Awesome. Thank you, Linda. Awesome. Hello, everyone. My name is Jacob Stewart. I'm with Coast Home Loans. I have been a loan officer for years, based out of here in the Central Valley, mostly working Northern California. All of our pre-approvals are good for anywhere in California, and we can even do some in other states as well. Actually, a majority of the states, I think just Nevada itself is what we can't do it in right now. I work with an experienced team. A lot of our loan officers on our team, our underwriters, our processors have been in the business for over 20 years. I'm newer in the industry. 4 years doesn't seem like a long time. These past 4 years have seemed like a really long time with all of the craziness of COVID, the interest rates dropping, as well as them rising back up. I came into the industry when interest rates were at the lowest, and I saw how happy people were getting into their homes with low interest rates, seeing the mortgage savings, as well as how well the industry can do being in this industry. And as soon as I got licensed, interest rates decided to go up. So I got to see how tough it was being in this industry and how creative we have to get on the mortgage side to get people into homes and making sure their payments are affordable, as well as making sure we could stay within how much they're looking to spend cash to close. So the first thing I'm going to go over for you guys today, I brought a packet for those of you guys in office today. If you wanted to follow along on that, it's going to be exactly what I'm seeing here on my screen. I'm going to give you guys a breakdown of Mortgage 101, which is essentially Barstool basics, Zillow lies, and why it takes 30 days to close a loan. So the first thing I wanted to make you guys aware of is there's a difference between getting qualified as well as a difference between being pre-approved. Getting qualified, I call that your two-legged bar stool. I don't know if you guys have ever tried to sit in a two-legged bar stool, but it doesn't work. You will fall over. It's not very safe. In relation to mortgage, we call getting pre-approved the 4 C's, which are essentially your cash, which is your assets, your credit, your capacity, which is your income, as well as the collateral, whether it's your property or the property you're looking to purchase. These 4 C's are a sturdy bar stool. They're a 4-legged bar stool. You're not going to fall. You're going to be much more safe going into purchasing your home, and you're going to have more reliability in getting your offer accepted without any issues along the process. So I'm going to do a little bit of a deep dive on each one of these really quick for you. So the first one I'm going to dive into is your cash. Now, the cash is the assets you guys currently have available, whether that's in your bank accounts, your IRAs, your 401ks. It's how much money you have you have available to spend on a loan. Now, a lot of people getting into the process don't realize there's a difference, or there's more than just your down payment. They think, hey, I could do my 3%, 5%, 20% down payment, and that's all I have to spend. But there's a whole nother aspect to the cash to close when it comes to getting a mortgage loan, which is your third-party fees, which are your title escrow fees that we see, as well as your prepaid expenses, which can be your taxes we collect every month, your insurance that we collect for your escrow account. These fees are all included on top of the down payment, as well as the cost itself to obtain an interest rate, which can vary depending on your credit score, as well as how much of a down payment you're coming in with, which essentially affects your loan level pricing adjustments on the loan, which determine how much you're going to pay for an interest rate. Each person, each scenario is different in regards to what interest rate they can get, dependent on their specific file and scenario. The next stool, a part of the four-legged bar stool, is your credit. Now, why is credit important? Well, credit's going to tell us where exactly we can land your interest rate, how much you're going to pay for it, and which loan programs are going to be available to you. I'll dive a little bit deeper on which programs we can qualify you based on your credit score, but it's going to give us insight right out the gates when we start doing an application for you guys on exactly what we could do. And if any work is needed along the way prior to getting you to home, we can actually work on credit repair. And your credit report is going to tell us what exactly we can do to build your guys' credit score. It'll give us an estimate of how long it's going to take to increase your guys' credit score. That way, we can qualify you guys for more programs, maybe even down payment assistance if it's needed, and get you guys into a home with a good payment. Now, a lot of questions that people often ask when we're pulling credit is, will credit or pulling your credit hurt your credit score? There's going to be a little bit of a hit to your credit score when we do a hard pull. You can expect about 5 to 6 points on your credit. However, within about 30 days, you're going to see that credit score go back to where it was previously. Another question we often see on the mortgage side is, can we bring from a previous lender the credit pull we did or credit report over to you and utilize it? Unfortunately, no, every single loan officer has to have their own credit report. It's more trusted with the investors that we use. So every time you go to a new lender, they're going to have to pull your credit. The good side about that is, as long as you go to multiple lenders within 30 days, you're not going to see any further impact on your credit score. It'll stay the same. If you go anything past that 30-day mark of your initial pull, that's when you might see another 5 to 6 point hit on your credit score. Now, when we're going into soft pulls or hard pulls, there is a little bit of a difference there when we're talking about both. Now, soft pulls, they're not going to affect your credit. Typically, what we do with soft pulls when we do a credit pull is it gives us a general idea of where your credit score is. It doesn't give us as much information as we would typically see on a hard credit pull. Hard credit pulls are typically used when you're ready to rock and roll. You want to get into contract right away, and we're ready to make that move. Soft pulls are done early on in the process. If you're unsure of where your credit score is at the time, or maybe you think it needs a little bit of work as we go along. A part I missed here on my presentation is when I pulled my credit and the score was higher. What I mean by that is a lot of times people use, I myself included, will take a look at Credit Karma to see where your credit score is, or maybe some online experience, something online that tells you what your credit score is. Now, when it comes to Credit Karma, they're great at telling you kind of a general idea of where your credit score is. It gives you a rough range, but I always give it about a plus or a minus 30 points on what you're seeing on Credit Karma. Because when we see that actual credit report pull, it's usually, it could either be on the dot, but most of the time I'm seeing either minus or plus 30 on that. So it's not always trusted, but it gives you a good general feel compared to what we're seeing on our end. One of the other important factors of a credit pull is it's going to let us know if there are any bankruptcies, foreclosures, or short sales that have happened previously throughout your life, which typically when it comes to loan programs, there's usually a waiting period anywhere from 2 to 4 years, sometimes 7, depending on what kind of thing or what kind of bankruptcy, foreclosure, or short sale and what program we're utilizing for those programs. So if we see that right away, we can give you an estimated timeline of when we can prepare you to purchase a home, or if we could see if there's any type of wiggle room where we can kind of get around that waiting period if there's like a natural disaster that happened or some type of significant impact in your life where we can shorten those timeframes or find a way around them. The next portion here, and it's one of the most important parts outside of your credit, it is going to be your capacity, or it's going to be your income. Now, what we're looking at here is we're going to look at your pay stubs. We're going to look at your taxes if you're self-employed. And we're going to look to see if you're a salary, hourly, commissioned, or a self-employed employer. What we're typically looking for is to determine whether or not you have stable income and it's likely to continue. So whether or not we're doing an hourly calculation of your income, typically we want to see about a 40-hour average work week on your pay stubs, and we want to see that line up from when you first started that year at the beginning of the year in January all the way to the end of the year. We want to make sure that's a 40-hour average. If it falls under that 40-hour average, what we're going to have to do is do a 2-year average of your income, where essentially we're looking at, let's say it's your 2025 income, and then we're going to look at the very last pay stub that you received in 2024, and we're going to do an average of that income for an hourly rate employee. Salary is pretty straightforward. We just work off of that salary that you're receiving the year. For self-employed borrowers who are maybe getting a Schedule C, we're typically working off a 2-year average of your income based off of the Schedule C on your tax returns. If you've been in the business or had your business for at least 5 years, we could do a 1-year average, which often enough, if you've had a good year in 2024 and not as good in 23, it can actually increase your income, give us more qualifying power towards your home. What the income and the credit's going to allow us to do when you combine the two of them together is it's going to tell us where your debt to income ratios are. Where your debt to income ratios are, it's going to be your income versus the debts you hold and the proposed monthly payment. Those debt to income ratios are going to tell us what programs we can qualify you for, if any debts need to be paid down before we can qualify you, and essentially allow us to approve you for these programs based off of where your income lands. Now, the collateral, that's pretty straightforward. It's pretty short and simple, short and sweet. Essentially, what we're looking at there is the value of the property that you currently hold, what we think it's going to appraise for. If you're going to sell it, what are the net proceeds you're going to receive for it? And the house that you're looking at, what exactly is the value, how much that proposed payment's going to look like versus your debt to income ratios and the interest rate. That one's a pretty easy piece. It's not as big as your credit and your capacity, which is your income. Now, in the loan process, once we have all 4 C's, capacity, credit, capacity, cash, credit, collateral, what essentially that allows us to do is it allows us to determine which loan programs we can qualify you for. We can see your credit score. That allows us to dial in which programs we have. We can see your income. That determines where your debt to income ratios are and which programs we can also qualify you for. The main ones I'm going to talk about today are your conventional, your FHA, your VA, your down payment assistance, which is your Cal HFA loans. This is a California exclusive program. It's one of the best first-time home buyer programs out there, really competitive interest rates. And then I'm going to do just a small amount of time on the bank statement loans because we don't see those quite as often. However, they do come up every once in a while, which allow us to get people into homes where we otherwise might not be able to. Awesome. So starting off, the first one here I'm going to talk about is your conventional buyers. Now, conventional loans are a really great program. The minimum down payment requirement for a conventional loan, if you're a first-time home buyer, is 3%. If you're a second-time home buyer, that jumps up to about 5%. Typically, well, actually, you need to have a 620 minimum credit score for a conventional loan. Usually, the best time to get a conventional loan, and this is just from being in the industry and seeing what the rates do and how much the mortgage insurance jump, is the best time to get a conventional loan is probably if you're around a 740 and up credit score, and you have a larger down payment of at least 20%. That's when you're going to get the most bang for your buck. We can actually remove that mortgage insurance. You won't have the extra mortgage insurance payment. And we can get you really good interest rates in comparison to maybe an FHA loan in the same exact setup with 20% down and a higher credit score. The one downside about conventional loans and compared to FHA loans, which I'll dive into here shortly for you, is usually they have a little bit lower of a back-end ratio or your debt to income ratio. They will only allow about, it can go up to 50% if you have 20% down, but if you're anywhere in the 3% or 5% down payment, they're probably going to want to keep your debt to income ratios around 40%, where only 40% of your income is going towards your debts is going towards your monthly payments each month. One of the benefits of a conventional loan is with appraisals, they typically have less stringent requirements when it comes to the property standards and what needs to be done in order to get into home compared to your other loans. They're not going to require as many fixes on the home, whereas with an FHA loan or any government-backed loan, you're going to have to fix the roof if there's any problems. If there's any paint chips in the house, you're going to have to get that fixed. If there's any structural issues, you're going to have to get that fixed, where it might be a little bit easier to get into the home with a conventional loan in comparison to your government loans. The next one I'm going to talk about here is your FHA buyers or your FHA loans. The minimum down payment for an FHA loan is 3.5% down. It is only for primary residence, so it's residences, so it's not something you can buy an investment property for. You can only buy that primary residence, the FHA loan. If you live in there for a year, you can always move out and get a conventional loan or buy an investment property with a conventional loan as long as you can afford it. The good side about an FHA loan is their minimum credit score requirement is a little bit lower than an FHA loan. They require a 580 minimum credit score, whereas with lower credit scores, such as with an FHA loan of 580, you're not going to get as big of a hit with your interest rate that you're trying to obtain with an FHA loan. So a lot of the times, if you don't have a large down payment, such as 20%, 10%, somewhere in that range, an FHA loan makes sense because we can get you a really good interest rate. You are going to have mortgage insurance, but we can get you into a home, and the back end ratios go up to 50% and sometimes even higher. So it could allow us to push up your purchase price with an FHA loan in comparison to the conventional loan. The downside of an FHA loan, which a lot of realtors can vouch for, is the appraisals can be a little bit more strict in the requirements of what you need to get fixed and compared to your conventional loans. And there's a little bit more of a process with these loans and compared to the conventional. But the good side is it brings a lot more buyers into the market with these types of loans. Another downside of an FHA loan is, unlike the conventional loan, you keep mortgage insurance for the life of the loan. So it's not something you can get rid of unless you either refinance out of it or you come in with at least 10% down on an FHA loan, where eventually that will fall off after 11 years with that 10% down payment. The loan limits with FHA loans are a little bit lower than what you'll see with a conventional loan. I know out here in San Joaquin County, you're looking at about a 650 loan limit. In Stanislaus County, unfortunately, those are a little bit lower. It's a 500 loan limit, what we can get you approved for with an FHA loan. The next program here, and probably my personal favorite just because the rates are absolutely amazing, are your VA loans. It is for veterans or widows only. You can come in with 0% down payment, which means you don't have to come in with that 3 or 5%, 20% down if you are a qualified veteran. Which is really good. It allows you to save a little bit of money, keep more money in your pocket. And the bright side about a VA loan as well is if you can get seller credits, which I know a lot of the Keller Williams agents are able to obtain because they're all amazing here, is you can actually get a VA loan and come out of pocket with no money at all and get into a house without spending a single dime out of your own pocket if you can obtain seller credits with the VA loan. On top of that, you're going to have an amazing rate comparison to what you're seeing with FHA and conventional loans. Now, the VA doesn't necessarily require a credit score. They don't have a stated credit score limit. So technically, you really don't have to have a credit score to get a VA loan. However, a lot of investors have overlays. So a lot of them are requiring a 550 minimum credit score. It just kind of depends on who we're sending your loan to, which good for our company, Coast Home Loans. We have numerous, upwards of 10 investors we could send your loan to. And if we don't have an investor that could do it, we can always reach out to more to see if we can get you a loan, if that credit score requirement is a problem. All right. So probably one of my favorite programs I wanted to talk to you guys about today is CalHFA Down Payment Assistance Program for California residents only. For first-time home buyers only, all occupants have to live in the residence in order to obtain this loan. What CalHFA is doing is they're essentially providing 3 to 3.5% in down payment assistance, where they will essentially come in and cover the cost for your down payment that you come in with, whether it's 3 to 3.5%, whether we go conventional or FHA with the CalHFA down payment assistance. One of the things with CalHFA is they do have income limits. So if you are below the median income limit for a particular area that you're living in, you actually get a slightly better rate. If you're over that 80% mark for the median income limit, you go a little bit higher in rate. It's not too significant to move the needle on the file, but you get a little bit better or a little bit worse of interest rate with the more you earn in income. They do have an income cap. I know for here in San Joaquin County, it's about $182,000 for your family. However, it depends on what county you're living in. You can go and look that up through CalHFA's website if you want to find out what county, or you can reach out to me and I can give you more details on it as well. The minimum credit score requirements for a CalHFA loan are 640 if you want to go the FHA route, and 660 or 680 for the conventional route, which if you do have a higher credit score like 700, they actually allow the back end ratios or debt to income ratios a little bit higher, which gives us a little bit more purchasing power on the loan. You do have to take a first-time homebuyer course with CalHFA. It doesn't take too long. You have to take a quick course online, which you do on your own time, and then you have to schedule a one-on-one call with one of their counselors, which usually takes about 30 minutes. Once you do that, you receive a certificate that you send over to us as the lender. If you go into contract, we provide that to the underwriters, which allows us to utilize this loan. With CalHFA, the income limits, credit score, as well as debt to income ratios all have to be met, as well as being a first-time home buyer and living in that home as a primary residence. It's not for investment properties. This part here is just some common elements of it. The CalHFA loan are your income limits, more restrictive credit and income guidelines, and first-time homebuyer restriction. The alternative lending I wanted to talk briefly about is bank statement loans. Essentially what bank statement loans are they are a program available to buyers who maybe just recently opened up a business. They're self-employed and they've only had it open for about a year now. Typically, they require 2 years of that business being open in order to utilize the income. However, with bank statement loans, we could work off of the deposits we see in your bank for at least 12 months and average your income based off of those deposits and get you qualified for a loan. Now, typically with bank statement loans, your interest rates are a little bit higher than what you see on a conventional FHA loan. If you're going conventional FHA, let's say the averages are 7% right now. A bank statement loan, you might have 8 or 8.5%. And they require typically around 10 to 15% down payment. So you have to have a little bit of money saved up with those type of loans. But they do open the door for some borrowers who maybe have newly established businesses. Awesome. So the next portion I'm going to go into here for you guys are the 5 parts of a monthly payment. We call that PITI or PITIA if you have association dues. It's your principal, interest, taxes, insurance. If you have a homeowners association, it's your homeowners association as well can be added in there, and why Zillow lies. Now, I'm not sure if you guys are looking at the same page as I am with the 5 parts of monthly payment and how Zillow lies, but if you're looking at Zillow, often enough what you'll see is they'll give you a 20% down payment, they'll give you a particular credit score, and then they'll give you an average of an interest rate, which on this particular example, it's showing an interest rate of 6.52%. Now, when you go to the national averages, whether it's Mortgage News Daily or some type of brokerage website where it provide averages, you see that the national average is actually 6.9% instead of 6.52%, which puts us as lenders in a situation when you're looking at Zillow compared to talking to an actual lender, they think they're being swindled out of getting a good interest rate because Zillow is showing something much lower than what they could actually get based off of national averages or their file in general, because every person's interest rate is different and what they can obtain is different depending on their credit score, down payment, and such forth. Now, diving a little bit further on these 5 payments, principal interest. The principal is essentially what you're paying down on your loan each month. Your interest is the interest rate that we calculate based off of 30 years after we deduct the down payment on your loan amount. Your property taxes, typically we calculate that at 1.25% of the purchase price. That'll give you a good idea of what you're going to be paying in property taxes. Of course, you got to take into consideration if there's a Melrose in the area or any type of special assessments in the area that might increase the property taxes further. But typically 1.25% times the purchase price will give you a good idea of what you'll pay monthly on the purchase price. Some areas are slightly lower, of course, and some areas are slightly higher. If you're in the San Joaquin Valley, you might have a lower property tax than if you're out in the Bay Area somewhere with the higher purchase prices. You'll pay a little bit more out there in comparison to here. Homeowners insurance, that cost varies. It's going to depend on the age of the home, your roof type, fireplaces, deductibles, and other factors. You can typically get a really good interest rate if you are currently paying auto insurance. The best route to go is to bundle that with your auto insurance provider and see what they can provide you. But our team will also reach out to our connections and see what we could find and see if we could beat what you guys find on your end. We'll always work together on this part and make sure you find a good quote and the best quote that gets you into a home. Typically, I like to estimate homeowners insurance at about $100 a month. That's somewhere right in the middle, not too high, not too low. Recently, I've seen a lot come in lower, but on occasion, we do get them a little bit higher than your $100 average. So when it comes to our monthly payments in the beginning of the process, they're not always right on the dot until we start getting those homeowners insurance quotes, until we actually look at the property tax bill and calculate out the property taxes once you are in contract. In the beginning stages, it can be slightly different, but it'll for the most part, be pretty close to what you're going to get towards the end of the file. All right. Mortgage insurance, you're always going to have to pay if you don't come in with 20% down on with the down payment. Eventually, mortgage insurance does fall off on conventional loans as long as you reach 20% equity in your house, whether that's the appreciation in your home, doing upgrades to your home. You can always reach out to your lender if you think your house is at 20% equity of what you purchased it for, and you can request an appraisal, and we could see if we can remove that mortgage insurance for you. FHA loans, you're going to carry that with you for the life of the loan until you refinance the loan later on. HOA dues, I know that's pretty specific in the area you're living in, but sometimes you will have HOA dues, which as a lender, I always like to make sure my agents are letting me know if there's HOA, because it can completely throw off a file, whether it's a $200 HOA or a $900 HOA. It can mess up our ratios, and we always want to make sure we're on top of that. So our wonderful Keller Williams agents, I know you guys know, but please let your lenders know if you're looking at a property with HOAs. We'll always look on Zillow as well to see if we can find anything. We'll be in contact. But those do sneak up on people sometimes, and they push payments a little bit higher than what you typically see on a home. Yeah, the HOAs, and they could change occasionally too. And typically what happens is we have to collect usually around 2 to 3 months of HOA in advance sometimes to close on the loan. So it can be a little aggressive sometimes with the HOAs. Now, when it comes to the mortgage payment, they aren't necessarily a part of your mortgage. They don't help with lowering your principal. They don't help with the equity in your home at all, but we have to include them for qualifying purposes because you are technically paying them. So they do count against your debt to income ratios when it comes to the loan. What I'm seeing here, the payment comparison, I just wanted to show you guys the differences between your conventional loan with 5%, the FHA loan, VA loan, so you can guys get a feel of what the payments look like in the exact same scenario besides the down payment, same credit score. What you'd be paying differently with the conventional loan in your FHA loan in regards to mortgage insurance, and with the VA loan, you can see that there isn't any mortgage insurance payment because that's paid up front. Now, I touched base on this a little bit earlier, but I'm going to do a little bit deeper dive on it, is the settlement costs. When I mentioned earlier that a lot of people think that you're just paying for your down payment, it's not quite just your down payment. It's your down payment, it's your lender fees, it's your title and escrow fees, it's your other third-party fees. With your prepaid expenses, you're looking at your odd days interest, which depending on what day you move into the home, you're going to pay a little bit more in prepaid interest on the property, determined on when you're actually moving in. You're going to pay homeowner's insurance for the first year, whatever that homeowner's insurance quote comes back to. If you have an escrow account, just think about times that by 12, and you'll get a good idea of how much you should add into your closing costs on top of the other fees. For your taxes, that's going to be dependent on what month you close, how much we collect and throw into your escrow account. But that's usually a pretty good chunk of the closing costs as well. On this next page here, I give you a breakdown of so you can get an idea of what these fees look like. So with a $500,000 FHA loan with 3.5%, these are just examples. But in the first one here, you can see you have a $17,500 down payment at the $500,000 amount, which is 3.5%. You have your lender fees. These are your discount points. These are the fees like your processing fee, your underwriting fee, which we're paying, or the investor is charging to get the loan done, to underwrite the loan. And then our team's fees, which are just like your processing fee, where our back-end people, our processors, our team captains are working on your file, making sure everything's going smooth. That's essentially how they get paid. Your discount points, this is something that you pay to obtain a particular interest rate. This is something that's different depending on your credit score per person. But this is just an example. Usually it's a percentage. In this particular example, you're paying up to 1% of the loan amount, which comes out to $4,909. But technically, we could push that up, including your lender fees, somewhere close to the 3% mark. So if you wanted to spend a little bit more money, get a little bit better of an interest rate, we could do that. We just have to make sure we're within the laws of a qualified mortgage and make sure we're not breaking any laws. Otherwise, we'll have to increase your interest rate to stay within the norm, or obtain seller credit where we can actually lower your interest rate a little bit further and get you a better interest rate or save you money. Here you can see the buyer's title insurance. I know out here in San Joaquin County is typically split. So $871, times that by 2 in some counties, or maybe more or less, just depending on where you're looking to buy. Your lender's title insurance at $1,000, your escrow fee at $700, which is split. Your miscellaneous escrow fees like your overnight fee, endorsement fee, maybe at $430, notary fee at $200 and $120. County recording fees, what does that bring your total out to? $10,024 on top of your down payment alone. The next portion here, these are your prepaid expenses. Let's say you close in the middle of the month on the 15th in the middle of the month on 15, a 30-day month. You're looking at $1,588 in prepaid interest. Your homeowner's insurance comes in at a little bit over $100. 12 months of it, you're getting $1,100. We're going to collect an additional 2 months on top of that 12 months of insurance for your escrow account. And let's say it falls on a month where you're paying 6 months or collecting 6 months of tax and in pounds, you're looking at $3,125 for those taxes. What does that come out to in prepaids? $5,997. When you add all of them together on top of your down payment of $17,500, total closing costs are coming out to $33,521 to get in this home in this particular example. So you're almost looking at doubling that down payment amount just to get a loan. Now, there are things the lenders can do on our end to lower those costs for you. We can increase your interest rate if you want. You're going to pay a little bit more in a monthly payment, but maybe we bring that closing cost down. Maybe the one thing holding you back is the closing costs you have in general, but you're comfortable with increasing the interest rate. That's something we could do to get you guys into a home, and then we can always refinance you later. I know Linda said it earlier, date the rate, marry the house. So we can always refinance you later on and get you into the home right now. That way you can start building equity instead of paying someone's rent for them or paying rent where you're not really getting any benefit towards yourself in that scenario. This portion is just giving you guys a brief example of why it takes so long to close a loan. I'm not going to dive too far on this, but typically we're looking at 30 days to close a loan. And within that 30 days, sometimes on the loan side, it could take a little bit longer. And why might that happen? Well, one example might be we're not getting the contract on the first day it was given. Maybe we get it 2 days, 3 days after. Another example might be, hey, maybe the borrower is not giving us exactly what we need to submit their loan to the underwriters, and make sure that it's getting into underwriting. That way we can meet the loan contingency and the appraisal dates. Maybe there was something wrong with the income, or maybe the borrower stopped working 40 hours to where we have to recalculate their income and increase their down payment and restructure the loan. There's a lot of things that can happen that can potentially push us out of that 30-day time period, which is why as lenders, as realtors, as borrowers, we know it's important to always stay in communication, make sure we're on top of gathering documents, make sure the realtors and the lenders are communicating together. That way we can ensure a smooth closing for our clients and make sure everyone's happy all the way around and in good business together. So this last portion here, I kind of just did a quick run through of it, but if you have the papers in front of you, you can kind of get a better idea of what could potentially go wrong with the file, which puts our timelines out. But I'm going to go ahead and end it here with my presentation. Again, my name is Jacob Stewart. I'm with Coast Home Loans. I want to thank Linda and everyone here for having me and showing up to our event. I'm going to go ahead and pass it on to the title team and escrow team here.
Oh, no.
Is it okay if we stand up?
Might be, yeah. Make sure that it's easy.
Yeah. Sure you're in the picture.
Yeah, but I'm, okay.
So, we're the title company, okay? And first of all, I just want to thank Linda for inviting us today to be a part of this presentation. And we're going to go over just a few things. But before I do that, I would like to just explain who I brought with me today. Kathy Campos, she's a sales executive. Okay, and then I also brought an escrow officer, Melissa Mason. Okay, it's backwards.
It is.
Yeah.
That's different.
So, but anyway, so wanted to explain our roles as sales executives. What we do is we partner with realtors and lenders to help them be superstars for you guys. By way of, in certain markets, you might have trouble finding sellers. We help the realtors identify potential sellers, potential buyers, by way of providing different tools that can help them do their job better. Okay. So a title company, what do we do?
Clear title.
That's one way to say it. And so basically, if you can imagine, California was created in 1850. Okay. And so if you can imagine, since 1850, land has existed, land has been divided, plotted out, parcels have been made, and then over those hundreds of years, properties have changed hands over the years. And so that creates a chain of title. And so the very first, very important thing that we do is we investigate and search title to make sure that it's been transferred accurately, right? And we look at all the different details with regards to that property. Before I go on, I also want to talk about this. So WFG Title, which is the company we work with, is the only title company that offers amazing discounts, okay? So what we do is we offer 25% discount for seniors, first-time home buyers and the military.
Veterans.
So, yeah,
Military.
yeah, active veterans.
That's with your veteran-in-law too.
Yeah,
Yeah.
absolutely. Great
Yeah,
deal.
so, so I guess if you go over this part of the process. So you found that great house. Okay, you've got that great loan. Now it's time to open escrow. Here in Northern California, we do title and escrow together. Okay? Down south in LA, they do separate. But anyway, here the custom is to do it together, title and escrow. Okay, and so, once the contract is signed on both the seller and the buyer, then we open what's called escrow. And so, we begin to open the file. Now, like I say, I brought my escrow officer, who is an expert in the escrow process, which escrow simply means,
We are a third-party entity. We're the bank, is what I take. Well, not the bank, but I call the holder. What we do is we work for the lender, the selling agent, and the buying agent. And basically, we're the third-party entity that makes sure that every, I is dotted and T is crossed, and make sure that everybody is, in an agreement that everything is met through the contract that the buyer and the seller, agreed upon. And then when everything is done, inspections, money's in, basically, we say, okay, everybody's good. Let's sign, let's record, and you get that beautiful, get keys to that beautiful home. So really, that is what we do, but there's so many intricate parts to it that are important that, major parts play for the buyer's agent, the seller's agent, and the lender as well. So we work together with that to really make it happen. And in the end, you get your keys and you get your home. And Melissa can explain a little bit more about that.
So yeah, the first part usually is the listing agent bringing us that contract, either pre-listing or once you go into contract. I'm usually meeting everybody when you go into contract because you're going to be sending that earnest money to me. I'll hold on to it for you while we work with your lender, and you're also going to be coming in, or I'll be sending out a notary to do all the documents once we get to that part. But my job is to make sure everybody is working together and then we're following the contract.
We're the escrow police, I guess. We're the contract police is what we are.
Please.
The police.
That's-
The officer, that's really what we are.
We are.
Escrow officer. So we are the escrow police.
so everything that we do by written instruction. So we follow what the contract says. So the contract between the buyer and the seller, it's an actual contract. And so we follow that to the T. And we work with the realtors and lenders to be sure that everything is defined. Because the goal at the end of the 30-day period that we talked about earlier is that the buyer have a clear title so that they don't have any unforeseen liens or unforeseen encumbrances. So if you can imagine, to make it real simple, when we look at, if somebody owns a home, obviously they might have a loan on the property. So we make sure that that loan gets paid off, right? When the money from the lender comes in, we pay off the old loan, make sure that there's no other encumbrances, they call it, right? To make sure that the buyer receives a clear and clean title so that they don't have any unexpected issues. And then our company, because we are a title and escrow company, we also insure title to that property. So if anything comes up in the future that we missed, then you're covered and pay all legal fees and whatever it takes to get that title issue fixed, if that makes sense. Yeah, I don't know if you guys want to add some more. There's so much to add.
I did kind of want to go back to his 30-day and bring that up just a little bit, because we are seeing contracts come in a lot, 21 days. We want to laugh because now they're going to be upset because it's going to extend and they're feeling like, oh, it's taking so long, when it's just really not realistic.
Unless
It
it's
really
cash.
isn't.
Unless it's cash.
Unless it's cash.
Unless it's cash.
And we can
So-
talk real quick.
correct me if I'm wrong. So one of the things, like if it is an all cash purchase, we can close in this.
Yes.
Oh, even sooner if we
Yeah.
already have the prelim
Yeah.
and we know it's clean.
So you mentioned prelim. Prelim.
A prelim, gosh, did we bring one?
No,
So on the prelim, that's gonna break down everything from the property taxes to utilities that are potentially owed on there. Any mortgages on the property, solar, or any kind of other liens, whether it be child support or anything. Say your boat got a ticket and years ago and you forgot about it and you maybe even took care of it, but you didn't put a release, it's still on there. There are so many things that
Any
can, that stay
child
on
support
title.
liens.
Correct. That could have been paid off 20 years ago, still on there.
So
So
if
we
you can-
have to clear all that.
if you can imagine in our wonderful system that we have here in California and all throughout the United States, you know, if you own property and you have some debt that can attach itself to the home, that becomes a lien, right? And so those liens shouldn't go to the
To the
the
new one.
buyer, right? So we, as a title company, we make sure that all those different liens get satisfied, right?
Correct.
Whether it's a child support lien, whether it's a mechanics lien, like if somebody put a roof on your home and you didn't pay them,
Correct.
now when they go sell your house, you gotta pay, right?
Right.
So you gotta make sure that all those are taken care of. So basically, again, in a nutshell,
Sometimes there's even liens on a property that didn't belong to that seller. Somehow things, they do record incorrectly.
Right.
So.
that
Well,
reminds me, so
Mhm.
so sometimes there might be a certain form that a title company needs, and it's called a statement of information.
Mm,
So first of all, don't be afraid of these. They are kind of intrusive. They ask a lot of questions, but sometimes whenever we see a certain common name, okay, and
That's
maybe
actually a really good one to bring up.
yeah, like they maybe have, you know, certain child support liens or whatever based on the name that they have, right? And so we want to clear the seller to make sure that they're not their liens, okay? So we ask, or we provide this document, it's a statement of information, ask you about your history for the last 10 years or whatever, where you lived, all the different aliases that you use, different names that you might use, different things like that. Where, and so we use this form to make sure that it asks for social too.
It asks for
Social,
everything, date of
pre-
birth,
previous
date of birth,
names,
previous names.
Marriages,
children, everything.
children's,
And
pretty much
it's a
everything.
Good way to clear. a lot of things.
Sometimes we don't get that till like the last hour. I recommend lead with you, you know, as a seller, if you are required to fill out a statement of information, you should do so as quick as possible.
So you have some clients that, you know, when they're working with their lender, they provide their 1003, you know, as well.
Mhm.
So that kind of just gets it out of the way and it's a lot easier.
That's
too.
also very-
It helps, you know, kind of get that elephant out of the room too. So it makes it a little bit smoother and gets you closer to that 30 days.
Mhm.
So fast forward a little bit, maybe we're kind of jumping all over, but you get ready to, so all the money has come in from the lender. Okay, everybody's happy, looking forward to closing. We will then record with the county the documents that say, hey, this is the buyer. Here's how they're holding title. But this all needs to be recorded for it to actually happen. This will never happen without the money. Okay, we got to make sure that the money is in escrow. Remember, we're the neutral third party that holds all the funds. Okay, and so the recording or recordation of the transfer of title will never happen, right?
Correct.
Never,
Ever.
until we have the
I'm
money.
not releasing until I have all funds.
And so-
And an okay, to be honest, from all parties.
Yeah, that's
Yeah.
a good point right there too. So again, all the money's in, make sure it's correct, everything's correct, and then we record with the county. And in this county, we do what's called electronic recordings. So we can do same day once everything is finalized. Does that make sense? to everybody?
Absolutely. Absolutely.
Yeah, makes sense.
And what we'll do too is provide everybody with a buyer's book, you know, in California. So we'll give you the process, we'll tell you the steps to take from the beginning when you're actually starting to look all the way down to you're ready to move and move, you know,
Yeah,
checklists
I
and
can-
whatnot.
I
We
can
can get
email,
those for you.
yeah, we can email.
I can let you, yeah. Because there's really a lot more to it. And I mean, we can get in depth if you guys have questions as far as, you know, what the prelim is and how it covers you. But it really is a lot of the technical parts on the actual real estate property. But if you guys do have questions, you know, feel free to ask them.
Any questions for the title?
And your best resource as a buyer or seller is going to be your escrow officer. They have tons of knowledge of what you can do, what you can't do. And if there's ever any kind of like what we call like cloud on title, cloud on title, we're going to be working with title specialists that are going to be sure and help us clear those like dark clouds over titles.
Yeah.
Correct.
And then also tell you what to look for too, especially when you're out there with your potential, clients that sometimes that they inherit a house, or they want to sell it, or they're looking to, assume something, just pick up the phone and call because there's so many different, we call them red flags, but you might need to put, get trust documents or you might be. Exactly. So there's just so many different things. Just pick up the phone. Your escrow officer is going to become your very best friend. Trust you.
And we love questions, so.
You've been at these purchase of property.
Now, God forbid that
Well,
happens.
that's not-
Somebody didn't do their.
Yeah, that means that Melissa didn't do her job. So no.
Or you chose to do insurance. No, I'm just kidding.
Well, but I will say, yeah, but that does happen. It does.
For whatever reason. Went on vacation, pay them the money. They can do what they call a mechanics fee on you, which would be you because you didn't pay for it. But anything prior to on that other person, they should have already done.
Correct. And there has been circumstances where, let's say, for instance, they went and got a private, a beneficiary loan. Maybe they needed a quick 20,000 to fix something or another. And they went out and they purchased it from a private beneficiary. Now, because a lot of times, those are just kind of notes and they're not recorded. That might come up, down the line. And that's something that, we work on as well. And now say we miss it, then you would file a claim with the title company. It's insured. And that's the whole purpose of having title insurance. So yes, it does happen.
So
You call us.
Jake talked about the title insurance. Okay, so homeowner's insurance protects you in the future, like if your house burns down, whatever. So what we're protecting you from is the past. Okay, meaning that from the date that your home closes and it's on record, okay, from that day forward, you're insured with us. Anything that maybe is going back. Sense. So if there is a lien after, okay, and in order for a lien to be valid, it has to be recorded, right? Okay. So that's where we specialize. We specialize in the research, identification, title things, right? Title links, different issues, right? And so, and the only way that a lien is valid is if it's recorded, right? And everything's based on time. Everything has a timestamp when it was recorded and different things. And so it's our job to investigate all of that stuff so that the new buyer doesn't have to worry about the past. Does that make sense?
Yeah.
All right, good. Thanks again for having us. And,
thank you guys for
and appreciate
coming.
you. Yeah.
Okay. Excuse me. So we're almost getting to the end. We're going to have Princess come up and she's going to talk a little bit. But I did want to cover something that Jacob was talking about things that can prolong your loan. There's a few things that can happen that are outside of your control, and there's some that can happen that's inside your control. So don't change jobs. Don't say, oh, I won the lottery, so I'm gonna quit my job. Don't do that if we haven't closed and recorded your home. Don't buy a car, don't buy a truck, don't buy a yacht, don't buy an airplane, don't buy any furniture, anything that has to do with credit. Do not do anything during this process. Don't overspend with your credit cards, don't, because that might change your credit score. So don't start buying everything on credit because, well, they already know about this credit card. So it's $5,000. I'm just going to run it up. Don't do that. Um, don't spend money that you have set aside for closing because we just kind of went over the closing costs and how that can be. So, if we give you, I know with me, I always ask for a net settlement from title actually from title. And I asked them, this is what they're going to purchase it at. Can you kind of give me an estimate of what it would look like at the end of closing? And I do that for my buyers and my sellers. And so once you get that kind of lets you know how much money you're going to need, an estimate of it. So don't spend that money. And also don't make any large deposits into a checking account or withdrawals from a checking account because that can potentially cause your loan to stop. So now we're going to have Princess come up.
Hey, everybody, sit down. How y'all doing? My name is Princess Scott. I'm with the Keller Williams Stockton Central Valley office. And I'm going to be going over some of the ways that it's beneficial and why it's beneficial to hire a realtor. There's a lot of for sale by owners. Be one of those, okay? See this amazing team? Call us, right? So when you're looking for a home, when you're looking for a home, what we want to define as your realtor, we want to define what you're looking for versus what your needs and your wants are. So your needs, maybe you have a family of three, you might be looking for a 3-bedroom, 2-bath, you don't want to share bathroom with the kids, or maybe a 3-bath, you might have a pet, you don't want to share that second bathroom that you have with the kids with your guests, or maybe you want to wash the dog, be for the guest bath, little things like that. So we're going to find your needs versus your wants. Linda did go over an earlier slide where we were talking about drawing that picture of your dream home, just to give you an idea and us an idea of what you may want versus what you may need. Your realtor is also going to be teaching you about the market. Some ways that we teach you about the market is by hosting seminars or workshops like this. We'll invite you to come in or do these presentations on Zoom. Also, we create valuable content. Y'all can also check out my page if you're looking for some marketing tips. Princess Scott Realtor on Instagram. We'll always be sharing updates, tips, insights through blogs, social medias, using infographics that we get from some of these amazing title companies and escrow companies. We'll be sharing market snapshots. We also do email newsletters and neighborhood tours with our signed buyers and prospective sellers as well. We also partner with some of our local experts and do some collaborations on financial planners, tax advisors, attorneys. So anything you may need as far as the buying process, we're here to assist you with that. We'll help you refine your search too. Things that you may be looking for, maybe the layout, the space, location. Maybe you're looking for a certain area that's close to work or close to your kid's school. We'll help you with that. Also the features and the amenities. What I'll be looking for is how the home compares in terms of size and the layout and the value to other homes in that area. The potential resale value. One of the fears that one of our guests mentioned was the fear of when you buy that home, you want to be able to sell it and purchase something else. So we'll always be looking at that potential for the resale value, those big ticket items such as the roof, the HVAC, the maintenance, the structural concerns. Those are some of the things that on some of these loans like the FHA, they're required. And title is going to make sure those things are also looked at from the past buyers as well. So the offer, which is the fun part, it's my desire to advise you on how to make the best offer possible for your situation. And that means after having a conversation with the listing agents, we'll advise you on the best prices and offers to make, how to negotiate, because it can go one of three ways. They can either say, yeah, they can either hit you with a counter offer, or they can say, no, this isn't good enough. Okay. Usually it's the two though. They're going to counter. I'll advise you on the best price and the offers that we can make and what things can be negotiated in favor of hopefully being accepted by the seller. Like the proof of funds, a pre-approval letter is something that we're always going to ask you for ahead of time. When you come and you say you're looking for a house, we're going to say, hey, are you pre-approved? And if you're not pre-approved, then we'll send you to Jake, our loan officer. The inclusions are the amenities that may be included when you're looking to purchase a house. That could be anything from the furniture to the fixtures to some of the outdoor items like the patios, the sheds, play sets, things like that. The inspections contingencies that are required for it to pass. So you'll be able to get approved for that loan as well. The request for the seller's concessions, closing dates, possessions, and who pays for what. Remember, cash is king and everything is always negotiable, right? So maybe they'll say, no, that isn't included in the price level. We can negotiate. Let us do the talking for you. It's always good to hire one plus. Make sure you remember your earnest money when your offer is accepted. The first thing we will be sending is your earnest money deposit to escrow, and this holds the home. The money will eventually be used towards your down payment and closing costs. If for any reason it's canceled for a contractual contingency, your deposit should be returned to you. However, the sale fails due to the buyer's breach of contract, the seller could request to retain your deposit for damages. That's one of the reasons why you don't want to spend your money that you plan on using for your down payment. Remember, there is a deadline to have that earnest money in. Usually it's 3 days. And
3 business.
3 business days, sorry. And it is very important to protect your deposit. Only cancel the purchase for a valid reason, whether it's just past inspection or if there's a physical issue that's not been disclosed that you notice, you can cancel it for that reason. The house has to go through an appraisal and the loan and final approval. These things also be included in some of the inspection as well. So we'll also get our title to be able to review that for you to make sure everything is good from the past before it transfers over to you, as well as in the future when it's now your property. So the things that could kill your job, as Linda mentioned, don't leave your job, don't quit, don't start applying for new credit cards, buying anything using that credit card that you already have, okay, pay it off and leave it. Borrowing, don't start borrowing money, okay, that's not gonna work for too long. And moving money around from other accounts, don't do that. Make sure you keep everything as close to the beginning as possible. Okay. For escrow and closing, they already went over the escrow and closing. That they did great. I think anything else to it. So representation and satisfaction as your agent, it's our job to educate you. Like I said, we have these seminars and these host events where we educate you as well. I think I hit something. Sorry.
Oh, no. Okay, I'm sorry.
Oh, figured it out. See, we can analyze your wants versus your needs, make sure that we're steering you to homes that fit your criteria, that are within your budget, that match your needs. May not get all your wants, but we'll definitely get, if not all, most of your needs, and coordinate the work of other professionals like inspections, the loan officers, title companies. We have a community of people that we keep as vendors that assist us with all the processes of the closing and the finding process, so you don't have to worry about outsourcing even attorneys if that's needed. Negotiate on your behalf and also educate you on what is reasonable for a negotiation price and solve any problems that may arise. So they insure the title, we insure the process, and we take all the stress and all of the headache out of the process for you as a realtor. So the bottom line is real estate is complicated. That's where we come in, Linda and I, and that's where our team comes in. That's why we have these vendors that also come in and help us educate our audience and educate our community. We go to a lot of their discussions and a lot of their presentations. So we're always learning from each other. We're always networking with each other. And we know that the people that we have vetted are actually the best people for the job. They're amazing. They're very thorough. And from the 4 years to the 20 years to the 50 years, our team and their team, top notch always. We want to make sure that this experience is good for them, stress-free for our clients, as well as we don't have to worry about any lawsuits or anything like that. So the process is always going to be good, and you're always, as a client, going to be satisfied. And at the closing table, My goal is that you feel that your purchase of your home is exceeded and all your expectations are throughout the interaction from the search to the close are achieved, and so is your goal. So when you close, as your partner, you are not just getting a trusted, respected agent, you are getting a local expert who is passionate about serving the community and those who call it home. So let's get started. Make sure you reach out to us. If you have any questions, you know how to get in touch with Linda. And you. And my y'all can also comment on my Facebook page. It's my Facebook page here. I did get a new number, so my new number now is 415-379-0419. Again, that's 415-379-0419. Stay in touch with me, and you can also find me on Instagram at Princess Scott Realtor. I'm servicing the Stockton and the San Francisco area, so make sure you send that DM and call me if you need anything. All right, soon.
Okay, so we're almost done. We're just gonna see if there are any questions on anything that we covered so far. I know we've covered loans, we've covered the buying process, we've covered title, the whole title process. Is there any question? Okay, so I'm going to just do a real quick recap and then we will be out. I just wanted to say there's a few things that I kind of wanted to, because I know we were talking about it in, how can I say it? We talk about this all the time, and the word was contingencies. And I know some people may not know what that means. And so I kind of want to break that down. A contingency is, Princess kind of said it, if you get into contract and we go and we hire a home inspector, and that home inspector goes in and uncovers something that wasn't already disclosed by the seller, that is a ground for you to, in lay terms, back out of the contract without it affecting you. So everything with that is attached to your earnest deposit, which is your home inspection, your appraisal, and your loan. If something should happen where, say, you go to Jake and for whatever reason they cannot get you the loan that you thought you were going to be able to get, and you're like, well, if I don't get the loan, I can't buy the property. That is why we have a loan contingency. Again, this doesn't have anything, it's outside of your control. Thank you. Outside of your control. Now, if you do something, forget everything I just said. But if it's outside of your control, we do have contingencies where you are then able to back out of the process and it not cause you any delay or any money or anything like that. You have 21 days to get that taken care of, right? So the loan, the appraisal, and the home inspection, that's 21 days. And I think title kind of said, that you can't close in 21 days, but those things have to be done within 21 days. And so if something happens and it gets extended, your real estate agent or me, if you choose me, we will sit down and talk and say, okay, we may need to do what we call escrow extension, right? An extension of time. And then we extend it and we say we need 5 more days for the loan process, or we need 3 more days for the appraisal. But within that 21 days, if everything happens the way it's supposed to be and there's something that you are not satisfied with, again, not just because, I just don't want it no more. Can't be like that. Change my mind. Can't be that. If it has something to do with, it can be, but again, the seller can say, well, because you wasted my time and I took my house off of the list when someone else could have given me, they may say, we want to keep a portion of your initial deposit. So we try to work around that. We try to make sure that doesn't happen, but you need to know that that's a possibility. If it goes beyond the 21 days and you still determine you don't want to do it, at that time, the seller can say, well, I want to keep all of the initial deposit. Remember, that's your skin in the game. So they can keep that. So I just kind of wanted to make that clear, because I know when you're a first time buyer, some things can be very confusing and you're like, well, I thought if I just do this, I could get my money back. And sometimes you can, sometimes you can't, but those are the parameters around it. So any questions, please reach out to me. For those of you that came to this live setting and you're connected with me, you know my Facebook, my Twitter, my YouTube, my TikTok, my Instagram, you know where to get in touch with me, my email. But for those of you that may not know me and just popped in, I am Linda Hillman. I can be reached at 209-373-3970. Or you can reach me at 209-307-7251. That's my office number. The first one was my cell number. I'm also located in the city of Stockton, but I do serve all the way from Monterey County all the way up to Placer County. I am a part of a team. It's called the Rachel Adams Lee Group. So if you see that logo or that in connection with me, that is still me. So yeah, that's everything. I gave out my email, linda@racheladamsleegroup.com. You can reach me there. You can DM me. You can even send a pigeon, and you know, you can, because I am everywhere. I am everywhere, literally. So I look forward to speaking more with you again. The one thing that you guys want to remember is this process can be stressful. It can be hard, but if you have a professional on your side, we kind of do the heavy lifting for you, because we do have this team around us. We have escrow, we have lenders, we have home inspectors, we have roofers, we have plumbers. I mean, some people, the last workshop we did, someone came up and said, hey, I own my home, I just need a plumber. And I was like, got you. Because you know, the way I used to say it when I first started in this business, I want to be your hey Alexa, your hey Google, your hey Katina, Quatora, whatever you use to say hey. I want to be that person. I want you to say, hey Linda, you know a plumber. Hey Linda, you know this, you know that, and I got you. So just know that. And when you're ready to buy, purchase, or invest, look a sister up, because this chick wants to help you to get into your next home. Thank you guys for all coming. And for those of you that are here, we're going to now give away some stuff. So we're going to see. Well, since there's, yeah, let's do this. Bye, people.